What's going on, guys? So let's do a little technical analysis. Breakdown. What we're looking at here is the Triple Q's ETF. What this is going to be is the 100 top stocks in the NASDAQ. So, where do I even start? Today, bad day for investors, bad day for people holding long accounts. Anyone who, is a shorter term trader, any swing trader or day trader who kind of held their position into overnight, absolutely got obliterated. The triple Qs were down 5%, a little bit of over 5% at one point in time in the day, and closed down 15 points. Now, one thing that I do kind of want to, you know, make note of and kind of really put into context is that when an ETF as big as, the S&P 500 or the triple Qs has intraday moves 4%, 3%, 5%, these are monstrous moves, okay? The volatility going on here is just absolutely insane. Now, if you're a technical day trader or scalper, you love this kind of movement. You love the average 2 daily range, although you may not enjoy the volatility, one day being up, one day being down, one day being up, one day being down, so forth and so forth. You have to enjoy the movements. When the market does return to its normal state, these ranges will be contracted. You will not see in a normal bull market, the triple Qs moving up and down 15 points in a day at 5%. 5% would be considered a phenomenal week or even a phenomenal month on the triple Qs. And to have this thing swing 5% in one day is just absolutely atrocious. So, even coming into today's session, I did come in with a extreme bull bias going in. A lot of the stocks that I was looking to watch was what I kind of wanted to see was stocks, get washed out or flush off the open, find that support and go red to green. That was going to be the best possible scenario for the bulls, just due to the fact that we were trading over the 5 day moving average as well as the 10 day moving average. And you can kind of see here, going back to yesterday's price action, not only did we close over the 10 day moving average, but we kind of gapped up over that supply zone. So all we really needed to do was just kind of confirm yesterday's highs, and then we had an easy, clear, open skies into that 311, 312, which was the 20-day moving average, and this would have created a fantastic move for a lot of tech stocks that really reclaim their 5 and 10 day moving averages. But just kind of starting off with pre-market, we were kind of down 100 points, down 150 points. And I'm like, okay, I'd rather not see it down that much, maybe 30, 40, 50 points, get an initial washout. But I'm thinking maybe we just gap down, gap into that support. And then we kind of trap those eager shorts off the morning, and then we kind of go higher. That did not happen. So, as a day trader, you need to understand that you do need to be able to flip your bias on the drop of a hat. If you're a longer term investor, you can't really do that as easily. However, there's, some tactics that you can do, kind of hedging your position or taking, if you do have a portfolio full of long shares, you could, take the SPY or the triple Qs short and kind of just hold them, until we reclaim some macro levels. So, nasty day in the market. Not only did we lose the 10-day moving average that we just reclaimed yesterday, we also lost the 5 day moving average, which we reclaimed 2 days ago. So what we're looking at here is 284.94. Now we have some setups back down to the downside. What this is going to be looking like here depends on what the price action want to do. Tomorrow we can have a little bit of a washout and then get some bounce and then kind of get rejected at that 297 and kind of stay within the inside bar day of today's huge red candle here. And that's going to make for some very slow price action. It's going to also make for some very choppy price action. So make sure you kind of stay on the cautious side. Go towards more of a, sizing down on your day trades and, taking profits a lot sooner. However, if we do lose 289.58, we do have room to the downside. We've got room to the lower Bollinger Band, which is currently sitting at around 284.65, which is also correlating here with this 512 lows where we kind of touched 284.94. So corrections and bear markets and bull markets and everything, they always kind of come in threes, right? So if we kind of just back up here, and we kind of look at, God, the chart is nasty. But if we kind of back up here and we kind of realistically look at, kind of where we started at, from the highs here of 408, a lot of consolidation here for, pretty much 2 months from November to December. Then we had the first big leg down. And then we also had some sideways action followed by just a continued movement. Kind of this nasty consolidation between January and March, which we did have some up days here. We also had some down days. We had some up days, but pretty much this price action didn't really go lower. It's not really going higher. It's pretty much staying down. So if this would be your first leg down, this is your bounce and your consolidation. This would be, the continued dead cat bounce that fails to get over supply, which is a 200-day moving average, and you would consider this your second leg down. Now, there's a couple of different ways that you can look at it. Some people are kind of looking at this and looking at, okay, if these are our highs and this is our first dip, well, this was our dead cat bounce. Now this is our second dip. We're looking for some sort of dead cat bounce into 311, perhaps even 328, followed by a continued move down. Now there's also another way to kind of draw it out. You can kind of look at it as if these are our highs, this was our first leg down, this was our first bounce, this was our second leg down, and then this is our dead cat bounce, our second dead cat bounce. Now this is our, capitulation sort of third leg down here. What we would need to see in this candle could very well be it marking these as lows. But, what I think is going to happen is I think we're going to get one more washout. However long that takes, whether it be a couple of days, a couple of weeks. But what I do think is I do think we will at least test the 284, and I think we will get that next washout into the 270s. If we kind of just look at where we're at on the weekly time frame chart. So where we came down to exactly is the 150-day simple moving average on the weekly time frame, guys. The last time we were down here, I don't even think, it was in the 2020 March, where we kind of came down and we tagged this area. We kind of tagged that 200 EMA as well as the 150 simple. And then we got that final washout, and then we got the big bounce. So if we're kind of looking for the same action here, what we would be looking at, and whether this takes part between today and tomorrow or next week, but if we get any washout through the 284.90, we can see a very quick stop to around 270, 276, 275, somewhere in that region. And then maybe that strikes the bottom. Boom, it looks like this. And then you get a nice volume green bar day here. And then we kind of go sideways. And then we just continue to kind of trickle up and back test and trickle up and back test and trickle up, back test, trickle up, and back test. And by the time you know it, we're reclaiming the 50-day moving average. And a lot of people are like, oh, that was the bottom. So, that's kind of how it works in a normal cycle. It's still a lot of information to, kind of digest, but realistically, do I see us having some sort of, dead cat bounce here? It's entirely possible. We did get, the few days worth of dead cat bounce on the 1 hour, on the daily time frame here. So if you kind of look, when we bottomed out at the 284.94, we kind of bounced one, rested 2 days here, and then we had the absolute destruction today. So anything below 289.50, I think test at least the 284. Obviously, keep this in mind. If we do lose 284, we do have room to 276 as well as 271. Those will be the next two pit stops. I think from there, maybe we get some sort of bottom, at least temporarily. If the market really starts to lose 270, the next major support, we're going to have to go all the way to the monthly time frame here. And if we kind of look at where we're at on the monthly time frame here, you can see that we've lost the monthly 20-day moving average. And the last time that we tested that was going back to that 2020 COVID crash. And then before that was going all the way back here to around October of 2019. So that was realistically the last time we tested the 20-day moving average. Obviously, you can see we're way below the 20-day moving average. We're actually on pace to hit the 50 EMA as well as the 50 SMA on the monthly time frame. And the last time we came close to the 50 EMA and SMA, was on the COVID crash, and it was also the same time in December of 19. Other than that, realistically, the last time is going all the way back here to around 2015. So, not too many times that we've been down here in this region, and multiple times before, over the past 5, 6, 7 years. every time we get into the 50 EMA and the 50 SMA, generally sparks that reversal for the continued uptrend. So if you are a long-term holder, a long-term investor, or a day trader, just, you know, kind of tread with caution here. Expect that we are going to have a little bit more room down, but look for some support, you know, hard level support at around 255 and 271. I think if you do start accumulating, you know, some long-term positions here between 255 and 271, you know, definitely when we do come out of this, whether it be another year, 2 years, 3 years from now, you're going to be sitting really, really nice. You know, you always hear that you want to be buying when there's extreme pain in the market. Well, this is pretty much the extremist of pain that you can possibly get, especially if you're a newer trader and you haven't really seen this. Guys, I hope this video kind of helps. I know I didn't really throw out too many day trading levels, but I kind of want to just go over a macro kind of picture and you know, paint the story for you guys. But with that being said, make sure you guys are subscribed to my YouTube channel. Also join the Discord, guys. That link is down in the description, and I'll see you guys on the next one.